Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to Everybody's Business from Bloomberg Business Week. I'm Max Chafkin.
And I'm Stacey Vanek Smith.
Stacey, I want to talk to you about capitalism.
About capitalism. All right, that's a big topic.
How people feel about it. Do they like it? Do they not like it? We also have an interview with Catherine Edwards, our friend of the show, economist, on the jobs numbers, which have been bad.
I mean, bad. I don't know. They're okay. It's like a B- instead of what used to be an A-.
Okay, B-.
I would say.
And then we'll talk about the question that is on everyone's mind, which is Peter Thiel the Antichrist?
Well, at least that's the question that's on your mind.
I'm half kidding.
We'll be talking about that.
We're going to be talking about Silicon Valley and its relationship with the Trump administration. There's a lot happening there, a lot to chew over. And for our underrated story of the week,
the rise and fall of the NFT, I would argue, is maybe the most overwrought expression of late-stage capitalism we've ever seen.
Save it for the end of the show,
I will
Stacey.
save it for the end of the show.
All right, Stacey, if you had to rate capitalism on a scale of 1 to 10, sort of a hot or not of capitalism, where do you fall? I
would say an 8. I'm still bullish on capitalism.
I bring this up because this is the point of the show where we, and by we, I guess I mean you, go to the streets of New York
True enough.
Or wherever, Idaho, and ask people kind of how they're feeling about stuff. And often the questions are about sort of things that are in the culture, whatever, what kind of donuts, how they're feeling about Labubus or whatever. Instead of that this week, I wanted to bring up a survey, kind of a grander version of the thing we normally do, which is that Gallup, as part of their regular surveys, asked Americans how they feel about capitalism, and the results were really interesting.
Well, and among Democrats now, socialism is more favorably looked upon than capitalism, which is fascinating. I wasn't quite sure what to make of that, but yeah, capitalism is maybe its moment is waning a little bit, or at least it's maybe not been canceled, but it's under question.
So here's the thing. Democrats have been pretty bullish on socialism for some time, right? It's been at least since, I'm looking at the numbers, 2018, maybe, when Democratic views of socialism surpassed views of capitalism. I mean, obviously, I think there's a pretty obvious explanation there that sort of coincides with the rise of Democratic socialism, Bernie Sanders, Zoran Mondami, who's running for mayor in New York. A couple of things that are interesting to me here. One is that Republican views of socialism have actually gone up since 2021, which I think is kind of interesting and probably coincides with the way that the Republican Party has been attacking big business. The other thing here is independent views of socialism have basically stayed the same, more or less. They've gone down a little bit. But independent views of capitalism have also gone way down, dropped by 8 percentage points from 2021 to 2025. So, there's a shift, and it's not just a partisan shift.
Interesting.
So talking about this made me think of this ad that's been going around on social media from Zoran Mondami, who's a candidate for mayor in New York. I mentioned him earlier. Let's give it a quick listen.
August in the Hamptons. Ocean breezes. Oversubscribed Tracy Anderson classes, parking woes. And this year, with a New York City mayoral election looming in the fall, a freakout that the most sumptuous of summer staples has ensued. Even overpriced lobster salad can't seem to make people out here feel better.
What I think is so interesting about this ad and why I wanted to bring it up is not only because it's trading on the trends that we're talking about, which is that capitalism and big business are becoming less popular, including less popular with independents, but also because of the tone, right? This ad is not editorializing. It's just reading the quotes from the New York Times, from rich people who don't like Zoran Mondami. And the only hint that you get that where the ad is coming from is that the billionaire character in this ad sort of makes a face, and the face he makes is super offended. And what I think is interesting here is basically we've gone from a period where if a rich person, if a big investor, if a big CEO criticized a candidate, that would be like a point against that candidate. And that has changed. Now you're seeing candidates essentially take those comments and stick them straight into an advertisement. So like Mamdani says, like, oh, billionaires don't like me, like don't threaten me with a good time. And he's using that to attract voters. I think that's like really interesting. It really shows like that there's a cultural shift happening.
I don't know. I would argue that populism is nothing new, and leveraging criticisms from rich people is not necessarily a new tactic, but it is super interesting, especially in this city, which is like kind of the capital of capitalism, I guess you could say.
I mean, populism is nothing new. It's just more popular, right?
I mean, historically speaking, it's definitely had its moments.
Stacey, if there's one thing I know about you, it's that you are a believer in the importance of vibes and the vibe session in particular.
I do think the vibes are important. That's true.
Yeah, and we've been talking on this show about the kind of disconnect between the way like normal people feel about the economy when they go to their jobs or when they negotiate for raises or whatever, and what they're reading when they read, Wall Street analysts or people like us or reporters or whatever talking about the economy. The economy on paper has looked pretty good, but the way people feel about it has not been great.
Yeah, that's true. And in fact, we got a big example of that this week. And here to talk about it is economist Catherine Ann Edwards. She's host of the podcast Optimist Economy and a contributor to Bloomberg Opinion. And she joins us in the studio now. Hey, Catherine.
Hey, y'all. I'm so glad to be here.
Catherine, we're recording this on Wednesday, September 10th. Yesterday, the big economic news was that the BLS revised the number of jobs that were created over the last year downward. That basically we have 1 million fewer jobs over the last year than we thought we did.
1 million.
Stacey called this a mondo.
A mondo number.
A mondo
revision.
It
was an unguarded moment when I was absorbing the number. It was that big that I somehow reverted back to my 12-year-old self. I was shocked. How does this number get calculated, and why did it get revised so much?
I think in some ways the easiest to understand it is to start at the end, which is if I wanted to know with incredible precision the number of jobs in the United States, there's a very easy way to find out. I would look at tax records. And every employer has to pay payroll taxes on their employees with a specific account for each specific worker. So if I want to know the number of jobs, I just need to look at the taxes filed. The problem is that number takes 2 years to get right, because it's a census of every worker in the United States, and every job is 160 million records.
But aren't companies paying taxes like every quarter?
Yes, but they have, there's lags in how they fill it out. And then, of course, the data itself, we don't actually have the BLS dip into your records. They clean the data. They verify that people aren't being double counted. Just because it's an administrative source doesn't mean it comes like hot off the press, ready to go. It takes, about 6 months to a year to process it to make sure it's not duplicative or that they missed anybody every quarter. But being 2 years to final process, that's useless for understanding the economy in real time, especially if you're in a time like we are now when we're very worried about the economy weakening each day. So, most of the BLS's job is to work back from this number that we know will be right in 2 years to something that we can use today. And the first big part of that is having a survey that they send to the people who file those taxes. And so if it's 160 million workers, about 100 to 120,000 businesses will get the survey. And that survey is released within days of the month ending. So we know the number of jobs added in August by the 5th of September. And so every revision from the BLS is basically working your way from here's our first estimate on the survey to here's our final estimate based on the census. And every time they get closer from, this starting point to this ending point, they tell us what changed.
Well, let me just ask, the old estimate was that the economy had added 1.8 million jobs over the last 12 months, or so the 12 months before March.
It's April 24 to March 25.
Right. Okay. So, and then the new number is basically 900,000, 911,000 less than that, which leaves about 900,000.
Half.
150,000 jobs per month. Historically, is that and I feel like this is always a question when we're talking about polling is, to what extent is the way I feel like representative of and if somebody's saying like I don't feel secure in my job, the economy feels off, I'm not spending as much money, all these kind of vibe session type feelings, and then the economy's adding 150,000 jobs, does that basically line up with the vibe session feeling, or is there still a disconnect there?
Well, yeah, it's a lot of moving targets. So first, is it a big number? Yeah, I mean, it's huge. It's almost 1 million. It's a psychological hit to have 1 million fewer jobs than we thought. If you put it in terms of the percentage of total jobs in the economy, it's a lot smaller because we're adding jobs almost every month. The U.S. economy adds jobs, whether it's a big or small number. So in percentage terms, it would be the largest revision since 2009. If it holds, because of course, being the BLS, they're going to revise this one again.
Remind me, 2009. That
it sounds
like something happened.
Great financial crisis, or the aftermath of the great
crisis.
It was it was really the nadir of the labor market during the Great Recession. Was the last revision of this magnitude, and it speaks to the precarity that our labor market has. And I think that's what makes it a big number for me, is that it's not in good company with years that have big downward revisions. The revision itself is part of the process. We had a huge upward revision before these last two downward ones. Like, that's how the statistics work out when you are trying to estimate economy $30 trillion in size. I think what worries me is that it's downward and it's on par, at least at the moment, with the Great Recession. And so to your point and to your question about, how do we feel and how do we interpret these things, the fact that it's, big and bad matters. Because I think people have been looking for validation that their struggle in the economy over the past couple of years have been real. But at the same time, the ground is shifting under our feet. How many jobs is a good number of jobs to add in a month in the U.S. economy?
I mean, I would say like 100,000 would be great. Like between 50 and 100,000, solid. Under 50,000 doesn't feel great.
According to the most recent numbers, we're adding like 75,000 a month, which is still in Stacey's good zone.
But the good zone has also shifted because we have a large number of people leaving the labor market, retiring. And so the replenishment rate of the labor market is really this number of jobs is really, it's about jobs for the people who need them. So what has also happened over the last 2 years is that with fluctuation in immigration policy and preferences, most people don't understand that if you look at the working age population, like the prime working age population between 25 and 54 this century, in some years, most of the growth has come from immigrants. In other years, all of the growth has come from immigrants. If our country tomorrow said no more immigrants can enter, our population would immediately decline. So as we pursue this very, I would say, cold-blooded, heartless immigration policy of picking people off the streets and taking them out of their workplaces, that filters down to what is a good jobs number. In an era in which we had normal levels of immigration, you would need to hit 1 or 150. But in an era where we're not taking immigrants into the labor force, maybe 25 or 50 is enough. And I think what's interesting about this big revision is that it raises questions of what is a good number and what that good number reflects. No one thinks 0 is a good number, but of course, if we kick out all immigrants, 0 would be an overestimate of how many jobs we need. So it all comes down to where the number comes from in process and then what the number means in terms of reflecting the economy back. That's all numbers do, is reflect the economy and economic stories back to our understanding, and that's where the interpretation comes in.
So the President Trump, has spoken about how unreliable this data is. And of course, this infuriated me because I was like, no, the data, you got to trust the data. And I've worked I did reporting like where I followed BLS people around to get inflation data. And like, I just love the whole process of data. And this shook me because it feels like President Trump had a point when he said that the data collection is flawed, that the revisions, that it's not accurate, that there are too many revisions. This feels like an indictment of the data and like a justification. He threw out the head of the BLS. I was like really shocked because I love the BLS, and I was distressed to see this, like on a personal level.
Well, we should clarify that a broken clock is right twice a day, and that's kind of what he's doing right now. He's picking it out in terms of his own narrative of what he wants to project, but there are problems with our statistical agencies and the gathering of statistics that have to do with funding levels. I mean, a third of the political appointee staff positions at the BLS are not filled.
A third.
There are problems that the statistical agencies have had for a decade, which is why they've been, for a decade, not only advocating for more funding, but have been coming up with plans of let's move statistics into the next era. What I think is making it acute right now is that a faltering economy is much harder to predict than a growing one. If you were to step back and look at America post-war, this is one of the most tenuous economic time periods we have ever been in. You do not predict a recession for 2.5 years. When they raised interest rates in 2022, there was immediate predictions that we're going to have a recession. Here we are, 3 years later, still looking for that recession behind the door that we think is waiting for us. That's not normal to be in 3 years of potential and slow decline. And I think the statistics being off is reflecting more the economy and less the statistics. This always happens in recessions and the run up to them. We just don't normally hang out there for 3 years. That's normally like a 3-month period.
All right, I have a question, which is like every time I read, and maybe this has just been going on for so long because of like the dynamic that you're talking about, where we're just sort of waiting for that recession around the corner. But you read these stories about downward job revisions, and the next line is the S&P went up today. That
gosh, yes.
And yesterday I looked, okay, and as again, the markets are volatile. We're not talking about huge swings, but often when you get some bad job numbers, the market's actually, the stock market, I should say, goes up. And the explanation that's offered, Catherine, is like, well, this suggests that there'll be a rate cut. And in the Bloomberg story about this yesterday, you had economists and analysts talking about, oh, maybe we'll get a half-point rate cut instead of a quarter-point rate cut. Stock market loves that, I guess. There's something just weird about having this dark economic conversation, and meanwhile, market's up.
It's like the enemy of my enemy is my friend data edition or something.
That's probably the right way to think about it. I mean, the most important thing to understand is that the stock market is not a barometer of economic strength. To the extent that the stock market reflects the value of U.S. companies, it is an important indicator. But to the extent that it reflects betting on the value of U.S. companies, it gets a lot less instructive for our purposes about the underlying, economy that we actually care about. And so I think, especially with around these data releases, these are betting days. This is like all night at the casino. Like they've got their like little, quarters in the big
tub of quarters.
They've got the tub of quarters and they're ready to go because this is, you make a bet in the stock market and you're making a bet against a bet. And this is a chance for them to make money. And like they want to be positioned out front. So there is some genuine and incredible economic analysis that goes on, but the fluctuations that make the news tend to be the bets. And the bets are not helpful for knowing what is actually hurting American families, which is what this all comes down to. Do we have the best economy that Americans can have? And the answer is clearly no. And you get something like a downward revision, and we know what that means. Whatever the stock market bets on.
Like the problem here isn't it's not the data, it's the economy. Like that's what Catherine's saying.
Yeah,
like the data,
like with the vibes, like the vibe. You can believe.
But I'm saying
the vibes.
The data did not give you bad vibes. The economy is giving you bad vibes, and those bad vibes are actually, as Catherine's saying, like they're in the data. You just gotta look for them.
See everything. And how the economic narrative, like the overall narrative, gets told. We always have to remember that, like, the people who are really like the key, arbiters of economic vibe and mood are people who have a vested interest in not panicking in the economy. Like you did not want Joe Biden to go up there and be like, it's really bad. It's so bad. We do not sell whatever you have. Like in leadership, there is a little bit of like, we cannot go out there and tell people like, go panic. Like you don't, there are vibes to our economy. And I think people, again, it's hard to appreciate that, like, you don't want the bad vibes to come from the president. You don't want Jerome Powell up there with all the power he has at the Federal Reserve being like, yeah, it's pretty bad.
Catherine Edwards, thanks for coming here.
Oh, thanks, y'all. Anytime you want to talk Mondo numbers, you come.
You'll be under your Mondo number economist. Max, you have a story in Business Week this week comparing Peter Thiel to the Antichrist. And in fact, Peter Thiel seems to sort of be comparing himself to the Antichrist. So why don't you talk to us about this?
All right. Yeah. So, Stacey, yes, I've spent a lot of time reporting on this guy, Peter Thiel, who, if you don't know, is a Silicon Valley investor and like a really important sort of right-wing intellectual and political figure. What Peter Thiel is doing next week, which is just hilarious, is, especially if you have followed his career or whatever, is he's giving a 4-part lecture series on the subject of, quote, the Antichrist. And that has led to a lot of amusing jokes about Peter Thiel. I should probably just play a little clip from the Joe Rogan podcast the other day. This is Joe Rogan talking to the comedian Tim Dillon. He's kind of like a conservative comedian, big on the internet.
Well, here's what's really wild to me. 4 parts. It's not just one. One lecture on the Antichrist would be insane. This guy's doing a series. He's doing a 4-part lecture on the Antichrist, and nobody in his inner orbit went, Peter, how about one lecture on the Antichrist or no lectures? Not 4.
All right, this goes on. The joke is essentially that Peter Thiel is a little antichristy because he is this kind of like shadowy power player. He's a subject of all sorts of conspiracy theories, and there's something just sort of inherently funny about it. I do think Peter Thiel's sort of doing this on purpose. He is like kind of deliberately trying to be provocative. And I will just spoil the question of what is in these lectures for listeners. Like, I haven't heard them. They're going to be off the record. I don't expect that they will be reported. But Thiel has talked quite a bit about the Antichrist in the past. And his idea essentially is that the left is the Antichrist. And in particular, Greta Thunberg, the diminutive Swedish environmental activist. The sort of idea is that these figures on the left who are trying to like rein in businesses because of reasons of climate or because of AI safety or whatever are bad. And I think that's what's going to come out of this, 16 or so hours worth of Antichrist stuff. But I wanted to talk about it because there's this other thing happening right now in Washington, which is that all of these tech CEOs are like closer to Donald Trump than they've ever been.
I mean, it certainly does seem like we've been hearing a lot from them, for sure. I mean, they were there at his inauguration, and there was a dinner a couple weeks ago.
Yeah, last week, actually, featuring Mark Zuckerberg and Tim Cook. A lot of funny little moments in it. There was one where Trump asked Zuckerberg, how much money are you investing in data centers in the U.S. or something like that? Zuckerberg kind of squirms a little, says 600 million. And then there's like a hot mic moment later where you can hear Zuckerberg saying like, oh, I wasn't really sure what number you wanted me to say. And so there's just like, it's like a very like deferential pose.
It's interesting. I wonder, why are these CEOs being so deferential to him? I mean, these are people who have tons of money, some of the most successful businesses. If anyone has the muscle to sort of make their case to the president, or who would not have to kowtow to a president, it seems like it would be this group of men.
Yeah, you would think. And actually, this is why, full disclosure, part of why I want to talk about this is because like,
you have a book coming out.
Exactly.
It's out in paperback
thank
this
you.
week.
Plug alert. The Contrarian, the book I wrote about Thiel, is out in paperback this week. If you haven't bought it, please give it a shot. But the whole argument in that book is essentially about Silicon Valley's lurch to the right and the way in which the 2016 election in particular kind of sent it in that direction, and the role that Thiel played. You asked, like, why would somebody as powerful as, say, Tim Cook? Tim Cook runs this amazing global manufacturing colossus that spans, like millions of people in China and some of the most popular products in the world. A couple weeks ago, he went to the White House and presented Donald Trump in this hilarious fashion with this like golden paperweight and like thanked, said, congratulations, sir. Like, here's this great paperweight. And of course, we've been talking about this podcast that Trump has been threatening Tim Cook with tariffs. Like, right, there's no particularly good reason for them to have such a good relationship or for Tim Cook to be so deferential, at least from the surface. Now, I think two things are going on. One is that Trump has been attacking businesses and has been creating a situation where I think a lot of these CEOs feel like they have no choice but to flatter him. Like this is the only way they're going to avoid some sort of more severe regulatory action. The other thing is, I think that Trump's sort of politics and his whole stance with respect to business, it actually works better for a lot of these guys than for the Democrats. And that is a thing that I think we saw sort of most vividly during the Biden administration and the Biden campaign, when you saw a lot of CEOs who in the past have been, either centrist or even left-leaning, really get behind Trump. We saw this exact thing happen during the last Trump presidency, where you had these events. There was one at Trump Tower right after the election where all these CEOs went to Trump Tower and had a meeting with Trump. Thiel was presiding. And as I wrote in the book, if you watched the 90 or so seconds that was released publicly, it looked kind of like an uncomfortable meeting for these CEOs. And there were a lot of stories written at the time like, oh, they must be so uncomfortable. But then when the cameras went away, they all basically turned around and flattered him. It sounded exactly like what's happening now. The only difference is what was happening before in private is now happening in public.
But my question is why? Why do you think these CEOs still feel the need to be so accommodating to President Trump? I mean, obviously it's in their business interest, but it seems like they come to the table with a lot of economic power, a lot of jobs. It's been remarkable.
Well, I think, first of all, Trump's politics are in line with theirs, is I think the easiest and simplest explanation. There are a bunch of other ones.
I mean, tariffs wouldn't be.
Absolutely. I mean, Apple is one that you would think would be kind of in the crosshair. Some of these other companies definitely are not, because they essentially sell software or something like that, or even chips, right? Where Trump is cracking down on the Chinese chips industry, which ostensibly is going to help some of these guys. But in the case of Apple, they've basically just been able to negotiate exceptions. Apple got a exemption on semiconductor imports, a very important and valuable part of the iPhone. And behind the scenes, of course, these companies are all lobbying for things like that. So yes, the tariffs, possibly a negative, right? The other thing is regulation is a huge part of their concern, right? The big story these days is AI regulation. Trump has put this guy, David Sachs, close friend of Peter Thiel, was an early PayPal executive, as his AI czar. There's been all of this effort within the Trump administration to essentially go hands-off, completely hands-off on AI. Just let Apple, Microsoft, all of these companies sort of develop the models as quickly as they can. We're seeing some stuff coming out of Washington around copyright. The argument here is that we're in this race. This is the conservative argument, the Trumpist argument, as well as the argument that the tech companies are making. We're in this race with China to see who can develop the most AI. Because of that, we need to take our hands off our wonderful national champions and let them do as much as they can. And you see that coming out of Trump's messaging, as well as the messaging of folks like David Sachs and these other kind of right-wing allies of Donald Trump. The last thing is antitrust. And so the Biden administration was really cracking down on tech companies. And you saw all of these antitrust actions. You had a DOJ case against Google. You had an FTC case against Facebook. Pretty much every big tech company was facing some sort of scrutiny, either from the DOJ or from the FTC, the Federal Trade Commission. And the reason is pretty obvious. These companies have gotten just way more powerful. And there's been a bit of a dialing back of that under Trump. So Google just got a very favorable ruling in its Justice Department case. It looked like Google was going to have to basically divest Google Chrome, its web browser. Now it doesn't look like that's going to happen. Now, that's a thing that happened in the court. It's not necessarily something that Trump had control of, though. About a month ago, a couple of deputies in the DOJ's antitrust enforcement division were essentially forced out in what was interpreted, at least by some Democrats and some folks who are in favor of greater regulation, as kind of a way that is beneficial to the tech companies. Basically, these guys were antitrust hawks who were forced out. And we'll see. I don't think we know, but what these companies want is lighter touch regulation.
So tie this back into Peter Thiel and the Antichrist. Where does he fit in here? He wasn't at the dinner. He wasn't at the inauguration, but he's in the orbit.
All right. So my theory here is that Thiel a lot of people really don't like him because he's got some fairly extreme political beliefs and some weird beliefs, like his stuff about the Antichrist. But he is a brilliant investor, no matter what you think about him. And his sort of approach is essentially to take money off the table whenever he can. So he's in a very good political position.
What does that mean, take money off the table?
I mean, in an investing perspective, that means like selling when you're up. So
buy the dip.
It's the opposite of buy the dip. Sell the
peak.
Sell the peak. So very famously, Thiel was the first investor in Facebook. It's like regarded as the best venture capital investment like of all time. If Thiel had held on to the Facebook shares that he bought in like, I can't remember if it was 2004 or 2005 for $500,000, like he would be so much richer than he is today. Like he's worth, the last I checked, somewhere around 20 billion. Like he'd be worth like 200 billion or something crazy. But he sold shortly after Facebook's IPO because he wasn't sure what was going to happen. He essentially, like I said, he took money off the table. He limited his risk. And I think that's kind of what's happening politically. So you're at a time when Thiel is in certain ways like has never been more powerful. He's got all of his buddies in Washington. His worldview is ascendant. J.D. Vance, who is basically like one of his proteges, is the vice president. And you have all of these CEOs flying to Washington, tripping over themselves to be as flattering to Donald Trump as possible, to do whatever they can, even if it makes them look like totally lame in the process. Thiel, meanwhile, is kind of at a safer move, just being weird. But I think what he's doing is trying to create some distance with like the Trump administration at this moment, because he's sort of achieved all he can achieve. And there's downside here, right? Like Donald Trump is unpopular. His approval ratings are bad. We talked about the Gallup poll at the top. We've already seen some of these tech guys face real backlash from their association with Donald Trump. So Elon Musk, of course, sort of the most famous of the tech guys who have like really gone, all in like, embracing Trump. He's dealing with like a huge backlash. Like his car sales have gone down. He hasn't actually got a lot of the sort of policy considerations he really wanted. And I think these other guys, Tim Cook, the Google guys, Mark Zuckerberg, they're all in this position where they are now going to be very closely tied with Donald Trump. And it's going to be very easy for competitors or activists or whatever to like say, hey, you shouldn't buy an iPhone. Like, look at this picture of Tim Cook gifting Donald Trump this weird golden paperweight thing and saying how awesome he is. They're essentially like getting tied to an unpopular administration. Thiel, meanwhile, is kind of staying above the fray, being the, intellectual where he's most comfortable, and giving these kind of like, slightly provocative lectures on the Antichrist.
And if you want to learn more about that, you can pick up a copy of The Contrarian, which is out in paperback this week, but also out in hardback. So
my kids need to go to college, everybody.
Feed Max's children. Buy a copy of The Contrarian. Available wherever you get your books.
It's time, Stacey, to talk about our underrated story. Normally, there's like one story that jumps at us, but there were so many different ones this week. We talked about Scott Bessent, the Treasury Secretary, threatening to punch people. We talked about lumber prices. I had this one that I wanted to talk to you about how hallucinogenic mushrooms are making it harder for state park police to do their job because so many people
That was a great story
are
in the New York
stoned.
Times.
But the one we ultimately selected, Stacey, was yours.
So it has to do with NFTs. Those are the little pieces of digital art that sort of captivated the art market, but also a lot of the market a few years ago, not that long ago. But very famously, a lot of this kind of came to the fore when Christie's, the art auction house, basically opened up a department specializing in NFTs, had a huge sale of an NFT, a non-fungible token. It was almost $70 million. It was this work from the artist Beeple. And it was basically a collection of a whole bunch of different pieces of art. But it sold at auction for $70 million. And Christie's is so venerated. It's more than 250 years old. People were like, oh my gosh, NFTs are real. The value's real. They're being vouched for. Well, Christie's just closed their NFT division. And this is after a precipitous fall in the value of NFTs, because for a while, people were really spending big on these. Especially there was the Bored Ape series that I think a lot of people heard of. Justin Bieber very famously spent over $1 million. People were spending hundreds of thousands of dollars on these. And many of them turning lots of profits, and then
you know what I'm going to say here, but
what are you going to say?
Everyone who was associated with a story should be embarrassed. I mean, this is so...
I disagree.
With one exception. Hey, you make $70 million selling a JPEG. I feel like, that's impressive. But like Christie's, the sort of art world that embraced this obviously dopey, obviously pumped up, unnecessarily quote unquote art. No disrespect to like a kind of dorm room style sketch of an ape or whatever. But like that crap is not worth like how much did you say, Justin? $1 million like for a JPEG? Like
what I found compelling about NFTs, and I think the reason that people bought in was, first of all, they were sort of on the tail of crypto. And crypto is really hard for people to wrap their brains around a lot of times. And so it was like, oh, okay, well, crypto's obviously people are making big fortunes. It's becoming more and more legitimate. So I think that was part of it. Also, the way that it was explained to me that I found compelling was that it's a new way to own property. It's a new kind of property. It's a property where you can own a thing inside of the internet that you can move around. And you've seen this happen on like games, on like World of Warcraft. There was a secondary market of people selling like broadswords and stuff and making a lot of money.
Okay, I understand like the intellectual point you're making. I agree with you. Like crypto is super interesting and it raises all these questions about the nature of money and the nature of property.
Yeah, like stoner questions.
Yeah, really cool stoner questions that if you're walking in the woods with your buds, high on mushrooms, like you can talk about and then call the New York State Park Police and have them rescue you because you're so high. But I really think institutions like Christie's, like their job is like what kind of gatekeeper are you if you're just like, oh yeah, sure, whatever, digital art.
Well,
yeah.
now they're like the subject of some lawsuits from NFT
you
holders.
can understand why. Because if Christie's convinced you to pay millions of dollars for a stupid JPEG of an ape, like with smoking a cigar or whatever, like you might feel that you'd been had.
Obviously, for the NFT owners out there, of which there are many, it's a rough week.
All right, if you bought an NFT,
yes,
or if you,
we want to hear from you.
Like if you have thoughts on this, like either because you're like an investor in crypto or a believer in NFTs, or if you got your beautiful Bored Ape, printed out somewhere in your home and you look at it and you think, wow, that was a great investment, send us an email. Everybody's at Bloomberg.net. That's everybody's with an S at Bloomberg.net. Of course, hater emails are also welcome. We, as Stacey likes to say, a hate listen is still a listen.
It's true.
And we appreciate it. This show is produced by Stacey Wong. Magnus Hendrickson is our supervising producer, and Amy Keene is our executive producer. We get engineering help from Blake Maples, and Dave Purcell fact checks. Sage Bauman heads Bloomberg Podcasts. Special thanks to Jeff Muskus, Julia Rubin, and Maria Ling. If you have a minute, please rate and review the show. It means a lot to us. And if you have a story that should be our business that you want to hear about on the show, email us at everybodies@bloomberg.net. That's everybody with an S at bloomberg.net. Thanks for listening, and we'll see you next week.